Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tepo Mudiba, and thanks for joining me. Tonight, I'm joined by Roy Daniels, Head of Africa Trading at Rand Merchant Bank, for a closer look at the continent. Roy, thank you for joining us.
Pleasure, Tepo.
Last we spoke, which feels like quite some time ago, I'll start with what used to be Africa's largest economy for a brief second. Commodity prices in general across the globe have stabilized. Oil prices, they look like they're stabilized, pulling back a little bit right now. How are you guys viewing Nigeria right now?
So our view on Nigeria has much changed since we last spoke, which as you say, seems quite a while ago.
Yeah.
At that point, the reserves were falling, the foreign exchange reserves were coming off, oil price was battling below $50 a barrel. There were some concerns. The president was taking his time to set a new cabinet in place. So everything is settled down, apart from the president's health scare. Things are looking good. Oil prices better. Reserves have ticked up just below $30 billion. So we like what we're seeing there at the moment. The liberalization and allowing more dollars to come into the market to meet importer demand has been a huge plus. And just by chance, I happened to be in Lagos at the time the announcement was made. So there was a lot of excitement in our trading room there. And the ability then to be able to fill importer demand, go into the auction, bid for dollars. Very, very promising news. And we saw immediate reaction then from the parallel market. The funny thing is when you're in Nigeria, when things like that happen, you can be in a lift and there'll be an average guy from the street, and suddenly he's talking about where the parallel market's going to go. He's becoming a foreign exchange expert.
Yes.
And suddenly we saw them talking parallel market's going to go below 400, and we should have traded back then. The parallel market now trading 375, 380 versus the fixing at 315, coming off from 500.
Right.
So that's a massive positive for the market. So we like it. We're ready. We like the fact inflation's in check. We like the sort of economics that are coming out of the macroeconomic news is good. We just feel that currency at 315 is a little bit too strong.
Right.
We like the parallel market, but obviously we can't invest at that rate. So if you'd asked me prior to this where I thought the market could have gone to, I would have said probably 440, 450. If they floated it, slightly recovery back to 380. Now we think if they floated it, might be 350, 380, settle around the 350, 360 level.
Is potential for floating it still on the table, or not at all?
Not at all. I think much spoken about and much sort of wanted by the investor market from offshore. But I think the CBN is going to hold on to that for the moment. I think they'll shift the peg. So, but then the parallel market having recovered so much, is there the need for it to move isn't as strong as it was when we had a parallel at 500.
Sure.
But I still think there's room for scope for it to move to 340, 350 on the peg. So that's a possibility. And I think that some of those foreign investors that would have said absolutely no at a sort of 315, 500 split, they've probably put a little bit of cash in. We saw quite a sharp rally in the bond markets there. So we think some foreign money did come into those markets. I think they'll hold off a little bit now and just wait to see what happens in the currency and just see, can that parallel market hold at 380?
You touched on the bond market a little bit. Are we likely to see yields coming down even further within the Nigerian market?
You know, inflation's been under a lot of pressure there, and we were talking potentially inflation to 21%.
Right.
We've had to sort of temper that view now and think that it has probably peaked now. And I think for the region, you look at the West African region, and I suppose emerging markets in general, we kind of think that inflation has peaked. We'll look for those for inflation to sort of taper off now and then look for a sort of trend a bit lower. And invariably what's going to happen is as soon as it looks like it's turning, we'll see a big rate cut.
Right.
As we've seen in Ghana, 200 basis points, as soon as it looked like it was peaking. So we think there's opportunity there for those rates to come lower. Probably down to around sort of the 15% level again from the 1799 high.
So a lot more bullish on Nigeria than we were before.
Mildly bullish. I'm not gonna throw my full weight behind it just yet. Okay. That's a fast changing policy market. So mildly bullish, liking what we're seeing, just kind of poised and ready to go into those bond markets, I think.
Okay. If we stay in West Africa, any other markets that are interesting you right now?
Ghana.
Okay.
So Ghana, we've seen that big rate cut, 200 basis points on Monday, was last week, Friday, I think it was, 200 basis point rate cut. So inflation seems to have peaked there, rates coming off quite nicely, sticking to the IMF packages. I know there was a big scare in the market when there was declared that 1.6 billion unofficial expenditure they found hidden away somewhere, and and again blamed on sort of previous spending on voting that took place by the previous government.
Right.
The current government has done a great job now to sort of say, okay, well, whatever is in the closet now, we're bringing it out, and that's all that we have on the table. We met with the central bank there, really promising meeting, looking for new products, want to get a repo market going, really want to start getting involved in some more sort of structured trading that could happen in the market. Met with an advisor to the Ministry of Finance, positive news, what they want to do, what they want to change. They want to really grow that financial market product set in the country. So promising, inflation lower, a rate cut, bond rates a little bit sticky at this stage, waiting for those to show signs of coming lower. So we've liked it. We were holding a nice sized bond position in there. We've trimmed it slightly. We're just waiting to see what is the next move, even though we still think it's coming lower from these levels.
That sounds quite exciting in terms of development of the market. And I guess for institutional investors, any new products that come on board might be quite interesting to invest in.
I think firstly we've got to look at it, from us, from RMB side of it, and from working with our counterparts, First National Bank in country, to run some training around some of the products. It's no use us just training our own team, because then we've got a team of, we've got a trading bank of one. Yep. So we want to train more of the market and work with the central bank. And the first part we look at is the repo market. And from that we can look at then how do we then involve cross-currency swaps. We sort of touched on inflation replica bonds and inflation bonds there. There's no need for it just yet. They feel inflation is still too high. But other market products, and built mainly around interest rate hedging. We feel that on the foreign exchange hedging side of business, a lot has been done. There's a lot that's happened there. There's potential there for a forward FX market in Ghana that can develop, and we want to be one of the leading players there. And then how do we train up into repos and then cross-currency swap, IRSs, FRAs, forward rate agreements? How do we get into those product sets in the market as well? Establishing a fixing rate, establishing equivalent of JIBAR there, 3-month interest rate fixing. So there's a lot of work to be done, a lot of training to be done, but the appetite for it is there, which is really good news.
What does that all mean, I guess, for the prospects for the Ghanaian economy?
I think that it allows the clients then, I don't believe that you lose your business doesn't get into trouble because the rate moves 20%.
Right.
So if the Ghanaian cedi goes from 4 to 480, it just means that you're going to get more for your exports, and let's not forget they're a huge gold producer. Oil production is going to be becoming more prominent in the market, the cocoa, so you're going to get more from that. And your imports become expensive, you import less. Businesses get into trouble when rates go from 15% to 25%.
Gotcha.
Now, how do we hedge that risk for the local business? And that's where the interest rate hedging products will come into play.
Okay, let's move elsewhere on the continent. I know last time Zambia was one that you were quite bullish on. It seems as if elections went well, that economy is seeming to be firing again. Your overall assessment of where Zambia is?
Still like Zambia. so it's still a nice investment market for us. We look at the currency, very stable. We have those little blips that again might weaken slightly, but holding well below the 980. Copper prices are up, commodities are looking good. So all around, tourism's up. So we like what we're seeing in Zambia. The talk of possible talks with the IMF as to how they look at sort of getting some support should they need it. Eurobond issuances have slowed down. My concerns about excessive amounts of Eurobond issuances.
Yep.
So it's looking promising from a fiscal policy point of view. We think that the fiscus itself has got room to improve. The macroeconomics are looking good. Again, rates have peaked, we think. Inflation's come off quite sharply. We're seeing sharp drops in the T-bill rates. Bond rates are being pulled with it. So again, anticipation of foreign investment into the bond market has come through. We've seen some foreign investors looking for those yields. All round, pretty picture. Can it go much lower than this? I think the key driver is going to be around the inflation number. We'll keep a close eye on that. We think there is still some downside potential to interest rates and to inflation, but we're keeping a close eye on the inflation rate.
I guess on the inflation point, is there a concern on the feed-through effect from a cut in subsidies that they're likely to do? Will that, I guess, muddy the waters for the inflation outlook?
So you've got to look at it from a fiscus point of view. What does it cost for the subsidies versus what is the negative impact that it has inflation? We think that the cost to the fiscus is a good one. The impact in inflation is maybe 1.5% on inflation, which isn't a concern. Inflation is not sitting in the high teens. Inflation is 7%, so it might move up to 8.5%. It's not a train smash.
Right.
But for the fiscus, it's good. We forgot to mention the good rainfalls as well. So good rainfalls, good commodity crops coming out. Things are looking bright.
Okay. Elsewhere in the continent, we haven't touched on East Africa at all. Anything in the East African region that presents interesting opportunities right now?
Kenya, I think, is one that we liked for a little while as well through the course of last year. We're probably a bit neutral then now heading up to the elections. We kind of hold back on that. The currency's been very stable. I mean, it's at 103 from I think when we last met, probably about 101.5. So there was a little bit of concern when the currency weakened slightly, but not dramatically. I think it's a sort of wait to see what happens with the elections. Don't risk it now. I think there's enough opportunity in the rest of Africa. Kenya, you can sort of keep your powder dry, hold on for the elections, see what's happening. Possible, uptick in rates maybe, and then get into the market, but I'd hold off for there right now. Uganda, the other one there, yields have been fantastic.
Right.
If you only had Ugandan shillings, because the currency weakened so much.
Right.
So your gains in the interest rate market have been wiped out by the negative move in the currency. But it's moved a lot. Unfortunately, yields have also dropped a lot now. So the opportunity there, possibly, but not sort of your numbers that you look at investing into the other markets, Ghana, Nigeria, Zambia.
So it ultimately then boils down to a currency play in Uganda if yields are fairly low right now.
I think it's a currency concern, but that much weakness, we kind of think, well, it's probably topped out now, but then your return on your currency is not that great. So maybe see what happens in those markets. I'd probably invest small in that market. I'd be kind of holding back a little bit in Kenya just because of the elections. And in Tanzania, small market, limited opportunity, but again, something we're looking at, trying to get forward markets going, trying to get some sort of structured product capabilities going in country, but I think that's a little way down the road.
Perfect. Let's leave it there. Thanks to my guest, Roy Daniels, Head of Africa Trading at Rand Merchant Bank. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Mudiba_Tsepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.